And good afternoon. Welcome into Market Talk here for this Friday, May 6th. Great to have you with us once again. Thanks for joining us, making us part of your day. I'm your host, Jesse Allen. Find us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com. Find all the latest news of agriculture, all of our streaming sources, our radio affiliates, and much more online. MarketTalkAg.com. Well, we wrap up a pretty busy, wild week in the trade with some losses seen here throughout the grain sector, mainly corn and soybeans. Stock market has been up and down and all over the place today after massive losses on Thursday. We have a lot to discuss here to walk us through it and try to make sense of it. Our good friend Ted Seifried with Zaner Ag Hedge is on today. Ted, good afternoon to you, sir. Great to have you on. How are you?
I'm doing well, Jesse. Thanks for having me on. It's always a pleasure.
Yeah, I appreciate the time, Ted. Let's talk about this wild week. I mean, I think the big highlight of the week was obviously the Fed news and the interest rate hike and sharp sell-off in the stock market on Thursday. We've kind of seesawed back and forth on Friday, up, down, maybe looking like we're going to add to the losses, but it feels like that the Fed news was maybe one of the big overarching stories of the week here this week, Ted.
There was a whole lot of bigger stories, bigger picture stories here this week, Jesse. And, how we looked at things on one day versus how we looked at them on another day were completely different, right? After that Fed announcement came out of raising interest rates by 0.5 percentage point, the stock market had one of its biggest up days of the year. The market really liked that. But then the next day, when we're seeing stuff coming out of China about Beijing lockdowns, their public transportation locking down, things like that, then the market sees it in a different light because, the day of, we think, okay, 0.5 point interest rate hike, that's not enough to curb inflation or really stem growth. And so that's positive news. But then the next day, when you have the China news and you start to worry about global slowdowns, more shutdowns in China and cutting back on demand, then you start to think, okay, 0.5 interest rate point hike might be more than enough. So different feelings on different days. And in the meantime, just for like the grain markets, you've got a lot of other things going on too. You've got the Ukrainian Minister of Agriculture saying that they've got enough fuel and fertilizer to do their spring field work. You've got, weather, which is something we're watching very closely. That's changed fairly dramatically, or the outlook for next week has changed fairly dramatically since what we're looking at the beginning of the week. You've got South American weather happening. You've got export sales, which old crop corn and bean sales were really rather strong at a time frame where they really wouldn't usually be. And those old crop bean sales, I mean, I don't know how long we can sustain weeks like this. And yeah, I mean, you really got everything kind of pulling us in different directions. And you have very flighty markets because of it. Markets are having a really hard time making any sorts of decisions. And then on Friday, we really found ourselves under quite a bit of pressure because of that indecision, but also because, looking at the weather for next week, we're thinking, hey, maybe things are going to start to actually finally get better. Maybe we are going to start to make some progress. But who knows? Forecasts have a tendency to change a lot over weekends. And we're going to need more than just a few days of warmer, drier weather. I mean, there's a lot of us really need a fair amount of time to dry out before we can really get active again. And what if we come into Monday or Sunday night and we look at the forecast, and even if there is a window of opportunity to kind of dry down a little bit, the colder temperatures and the rains are back in for the following week, and
Mm-hmm.
so yeah, I mean, we're trading a weather market here. We're trading a weather market in South America. We're trading a conflict market with Russia and Ukraine. We're trading a COVID market with China. We're trading an inflationary versus deflationary market with the Fed. What else can we throw at it right now, Jesse? Oh, and then
Yeah.
bird flu too. So
Yeah.
yeah, I mean, we are overloaded with things, and this is just the market trying to digest all of that right now.
Well, and I would say to your point on the weather, this feels very textbook. We have a forecast for next week that is looking like we're going to have a planting opportunity. So, all right, let's take some risk off the table. Let's move some money out and wait to see what the Sunday night forecast looks like in that Sunday night open. This just seems like, especially quarter beans today, just some of that end of the week profit taking just because, we got 3 days ahead that, we'll get updated forecast, Ted.
Yeah, I mean, absolutely. It's Friday, and it really hasn't been a banner week. Again, it's been a very flighty week.
Hmm.
We were down the first couple days of the week, but then Wednesday and Thursday, you tried to push it lower, that didn't work out. Tried to push it higher, that didn't work out. Really, whichever direction we're trying to go, we end up fading it by midday or so. So again, this is a market that's just trying to figure things out, looking for more answers. We want to know more about what weather's going to be and what our progress is going to be like. And we'll know a lot more about that on Sunday into Monday. So I think
Hmm.
you'll have a more decisive market next week. Um, a lot of people want to know, are the highs in? Was that it? This would be a very strange time of year to put highs in for grains, but it's a very strange year, so you can't really say that isn't the case. I think very likely it's not. In my opinion, I don't think inflation is quite done yet. I don't think a half a point interest rate hike is enough, and I also just get the feeling, Jesse, that torpedoes be damned. Everybody wants to go out and have a good time, spend money. I mean, there's not a whole lot to be offered in savings accounts right now. Um, but after 2+ years of lockdowns and restrictions, last summer wasn't really lockdowns; it was more just restrictions. You just in fear, but you still had to wear masks to go places in a lot of areas and things like that. This is the
Hmm.
first time in a while where we've been really free to move about the cabin and just to do whatever we really want, and people want to get out and do that. And I think we're going to see a whole lot of money spent, which will flame the inflationary fire, at least in the first half of the summer. And, typically speaking, when we talk about grilling season or peak
Hmm.
driving demand or gasoline demand, it's usually in the first half of the summer. We're all pent up in the winter time, and then when it starts getting nice out, we just go hot and heavy. But then after the 4th of July, things start to slow down a bit. They pick up again right at the tail end, Labor Day and so on and so forth. This, for sort of that last hurrah, or quick travel before the kids go back to school, things like
Hmm.
that. Um, but I think at least until the 4th of July, that inflation I think stays hot and heavy. We're going to have weather concerns, and need for weather premium in the markets, especially for corn. A 181 national average yield, especially with some delayed planting. It seems like a real long shot. Yeah, we can say that, hey, we're getting subsoil moisture in a lot of areas right now, but also, are we switching to some later variety corn?
Hmm.
It just makes it's a really lofty number to be looking for. So yeah, I think there's a lot of reasons to be on our toes between now and 4th of July. I still think there's quite a bit more upside potential. But beyond that, it really kind of depends on what's happening weather-wise, as per usual,
Hmm.
but also, and maybe more importantly, what's going on the macroeconomic scale. And at some point, Jesse, we're going to have this inflationary bubble burst. I think it can happen as early as, say, midsummer. I don't think it's going to happen right now, but I do think it can happen, as early as about 2 months from now. And if it hasn't happened by then, I think very likely it'll happen into fall and the winter. So these are things that we need to really watch out for, because even if the grain fundamentals or livestock fundamentals or energy fundamentals, even if the individual market fundamentals don't turn bearish, or let's say they're bullish or maybe even more bullish than they are right now,
Hmm.
if you take the inflationary portion out of this, circa 2008, 2009, you can have $2 downside potential in corn, $4 downside potential in beans, even without a change in fundamentals, or like I said, even maybe more bullish fundamentals. So that's something we really need to be cognizant of. It's something that will happen at some point. And with the Fed starting to raise interest rates and the lockdowns in China and the turbulence that you pointed out in the stock market, you have to get the feeling that the red flags are starting to pop up, right? So you have to feel like that is coming probably sooner than later. But like I've been saying, I really do kind of think that we've got another 2 months or so where things feel real good, on a commodity price standpoint, not really good on inflation. But I think the American public is going to spend a lot of money in the next couple months, Jesse, and I think that's going to fan
Hmm.
that inflationary fire one more time.
Wheat markets were the exception today, kind of buoyed, it seemed, by the Stats Canada news this morning,
Yep.
as well as, the Northern Plains planting concerns, the delays there, the concerns about India's wheat crop. That all seemed to kind of combine to at least, give wheat a shot here today and kind of hang around firm, we'll call it, on the day, Ted.
Yeah, absolutely. I mean, we've talked about it a number of times, Jesse. I didn't think that we were really justified in going to the high prices that we did. And when we first had, Russia invading the Ukraine, that was more of a short squeeze than anything else. And since then, we've really settled into a range that was pretty much right in the middle of, the first 7 or 8 trading sessions
Mhm.
when that happened. But you've got enough production problems happening in enough of the major producers of the world that things continue to kind of get a little bit more bullish for wheat. So yeah, wheat is acting like it wants to break out to the upside, maybe even go back and try those highs once again. But the wheat chart is the exception. It does look really good. It was a good week for wheat. Like you said, India concerns, stats can numbers. Um, there's a lot of smaller things that all kind of add up together for the wheat that are just kind of, well, giving us a good reason to think maybe, hey, there might be a little bit more of a run to the upside. I don't know if we could go and make new highs. I don't have the feeling that the fundamentals are actually bullish enough for that, but we've already been there. So, I mean, we can traverse some more ground to the upside and see what's up there.
Cattle and hog markets today. Feeder cattle did their best to take advantage of the cheaper corn prices. Live cattle, not so much. And hogs, too, lower today. I know we got some news about African swine fever in Rome. I think that was a headline that maybe shook this market a little bit. Any thoughts in the cattle or hog trade here on this Friday, Ted?
Yeah, by the way, soybeans didn't like that either.
Yeah.
ASF seems to be expanding. So that together with bird flu that we have an issue with, soybean meal has been the dog of the grain complex that's been under pressure. That has been the concern for the soybean complex. As far as the cattle are concerned, you can really see it in how the structure of the market is as far as, the front months versus deferred months, and how feeder cattle is acting compared to corn and compared to live cattle, that the market is a bit concerned about what's going to happen on the demand front, especially when you get further out into the end of summer, fall, winter timeframe. Because theoretically the Fed's going to continue to raise rates, that we're going to see our economy slow down a little bit. People are going to get a little bit less spendy, so that domestic demand might be a little bit less than where we're at now. And then things like what's happening in China and lack of export demand as well. So that's kind of keeping the lid on things when you have all this turbulence in the stock market, especially with what we saw on Thursday, down 1,000 points in the Dow. Again, it breeds the questions about the demand side of the equation for the livestock markets. So that's kind of got us under a little bit of pressure. You don't really like the look of the August live cattle chart, which is once again testing that 200-day moving average. Now, every time it's
Mhm.
done that 5 or 6 times over the past couple of months, we've had a pretty healthy bounce off of it. However, this chart looks a little bit different than the last couple of times we've done that. This chart looks like it is threatening to roll over to the downside. And if you have these not as rosy longer term, fundamental outlooks, that gets a little bit more concerning. Now, I do think that we're going to see a hot and heavy grilling season. I think once we do finally start to warm up, I think we'll be surprised at the domestic demand that we have, despite what's going on in the stock market. But in the very short term, that cattle market is just really trying to cling on to some very key support right here. And if it can't do it, technically you could get a bit more of a flush out going forward. In hogs, we've already seen that. We've got bigger weights up front. Our export business just isn't what it was last year because China's hog industry has really rebounded from the ASF that they've had. Yeah, I'd like to say we've probably done enough work to the downside for hogs, but also I don't know if there's a big reason to go streaking back higher quite yet either. Like we talked about with cattle and beef demand, we really need the weather to warm up so we can really start this grilling season in earnest. And when that happens, then I think the outlook gets a little bit better. We'll chew through those big weights that we have up front. Um, but until that happens, we've made the correction in hogs, but I'm not exactly running in and buying the hog market hand and fist either.
Well, Ted, great stuff. We didn't really even touch on crude oil here today
Mm,
either. I'm sure you have thoughts on that.
yeah.
Feel free. Floor is yours here for the last minute or so. Any final thoughts you have for us today?
Yeah, the crude oil market is sort of the canary in the coal mine, when it comes to inflation and things like that. And, the way we were trading towards the end of the week, and yeah, the fundamental bullishness there is coming from EU wanting to move away from
Mhm.
Russian oil, as they should, as the market's been predicting. But we've reacted really well to that in the markets. A lot of times you get something like that, and it's buy the rumor, sell the fact. We'll spike higher, but then by the end of the day, we're sharply lower. We did see that on Thursday, but that wasn't because of that. That was more of what was going on in the stock market and lockdowns in China. And on Friday, we had a really nice comeback. Not closing at the highs, but this is now kind of a bit of breakout to the upside after a long period of consolidation that we knew we were going to break out one direction or the other, and it does feel like it's going to be the upside for crude oil. And going back to the inflationary conversation, if crude oil is going higher, that just makes you have the feeling that other commodities are getting ready to follow. So hopefully that wasn't a head fake in the crude oil, and that we are able to continue to go higher. I mean, not hopefully in the sense that I want to pay more at the gas pump, but for the sake of commodities as a whole. If crude can continue to go higher, that does really good things for the grain markets, obviously, because they have their energy components, ethanol for corn and biodiesel for soybeans. But also, like I said, canary in the coal mine and overall inflationary gauge, like we've been talking about, I think we've still got another couple months where we're going to be hot and heavy on that.
Well, Ted, great analysis as always. If folks need some advice, they're getting into a busy time of year, hopefully, presumably, with more planting next week. If they want to reach out to you and the team there at Zaner Ag Hedge to get a little advice, what's the easiest way to do that?
Yeah, easiest way, you call me directly, 312-277-0113. Aside from that, you can find us on the web at www.zaner.com. You can read a bit about us. You can sign up for our morning newsletter, which is just that, a newsletter. It's not an advisory letter. And then I'm also on the Twitters at the Ted Spread.
Yeah, on the Twitters, on the Twitterverse, at the Ted Spread on Twitter, and we appreciate the time and analysis as always. Ted Seifried with Zaner Ag Hedge. Thanks for joining us on a Friday, sir. Have a great weekend.
Thanks, Jesse. You do the same. Thanks for having me.
I appreciate it. Ted Seifried with Zaner joining us today on Market Talk. That's going to do it for the show. You can find us online, markettalkag.com. Have a great rest of your Friday and your weekend. I'm Jesse Allen. We'll talk to you on Monday.